So I'm going to kick off by just quickly introducing myself, and then I will introduce the panelists and they'll sort of join. We'll then do a little bit of scene setting, and then we have a couple of polls that we'll get the audience to sort of vote on, just so we've got a view of the profile of the people listening to this session, so we can tailor it as best as we can. So my name's Andy Pardoe. I'm Professor of Artificial Intelligence from Warwick University. I'm also the chair of the Deep Tech Innovation Centre at Warwick University, part of the Warwick Innovation District. I'm also the founder of Pardoe Ventures, which has for the last few years helped AI founders with various forms of advice and guidance. We've got three fantastic panelists with us today, all sort of seed level VCs. So I will start by asking James to join us, who's a partner from Bloomberg Beta. James, could you join and maybe spend 1 or 2 minutes introducing yourself?
Sure, it's great to be here. Hello from beautiful Palo Alto. I am a seed stage investor at a firm called Bloomberg Beta, where for the last 7 years, we've been investing in the future of work. And because it's been about 7 years, we've been lucky enough to be involved in some of the most interesting machine learning infrastructure and application companies in the US and Canada and the UK.
Fantastic. Thank you, James. Next, we have Carina, who's a general partner at Episode One.
Hello, everyone. I'm Carina, as mentioned, and I'm with a fund called Episode One. We're a seed stage deep tech fund based in London. And I would say sort of half of our portfolio is applied AI. I also have a background in the space, started a business called Helix Nano, applying machine learning techniques to designing novel therapeutics. So I really enjoy looking at teams and founders and companies working on and applying AI.
Fantastic. Thank you, Carina. And last but not least, we've got Simon from Octopus Ventures.
Hi there, everybody. Yeah, my name's Simon. I'm a partner at Octopus. We're a London and New York-based venture firm investing from seed through to Series B. We focus on 3 areas: deep tech, future of health, and future of money. And over the last 10 years that we've been investing, we've been lucky enough to invest in a number of exciting AI businesses, such as SwiftKey, Magic Pony, and Evie, which were respectively sold to Google and Amazon. So very excited to be here, and thanks all.
Fantastic, thank you. So we've got a great sort of panelists with us today. I just wanted to spend a couple of minutes just trying to set the scene a little bit and talk about sort of what's happened so far. So I think that the last decade for AI startups has been a fantastic period, and I was just looking on CB Insights today. So out of the 400 unicorns, 48 of them are registered as AI companies, and I'm pretty certain that a number of others are actually using AI. So I think it's fair to say the last decade's been pretty good from a AI perspective, and that's really been driven by the explosion around deep learning and reinforcement learning, combined with cloud platforms for huge data storage, and then the different compute architectures for sort of large-scale parallel processing. So that's really been a real driver for the sort of step change that we've seen, and the sort of the driving to some degree of the hype around AI and the AI startups. And I think this is also reflected on the areas in which the startups have been focusing on. So in the sort of early stages, we've seen a lot that have been sort of platform plays, a lot that have been hugely focused around a particular industry vertical, and others that are focusing more on a specific functional area that cuts across industries. And I think there has been a lot of hype around AI recently, and that's really sort of driven the success over the last decade. But I think we're going to find it a lot more difficult, and we will definitely sort of explore that as part of the discussion today. I really wanted to touch on a couple of themes as we go through the panel discussion. So we'll talk, of course, a little bit about COVID-19 and how that maybe has affected things in the short term. We'll also focus on the sort of trends and innovations that we're expecting to see in the next sort of 3 to 5 years that will be driving the new sort of AI startups that we'll see, and how investors what they'll be looking for and what are the key things, and maybe there's other innovations that we'll explore that might be of interest. If we get time, we'll touch upon the sort of investment profile as well. We have, maybe just to sort of kick things off, we've got a couple of polls that would be great to get the audience to vote on. So the first one is really asking, if you are involved in a startup, what stage are you at from an investment perspective? So are you pre-seed, seed, Series A, Series B and above? So it'd be great to sort of, if you could vote on that now. Hopefully that's appearing on the Slido app as we speak. And it'd be great to get your sort of feedback on that. So we'll just give it a minute to sort of let people vote on that. So that's really going to help us understand who the audience is, and we can hopefully tailor things a little bit towards that. Should need a little countdown really for the results. I'm not sure how long this will take, but anyway. So the second poll that we'll do in a second, we'll sort of explore a little bit around how COVID has really sort of impacted sort of startups, and have they had to pivot, etc. But we'll just wait for the results. So maybe we'll get started. Oh, here we go. So 46% pre-seed and seed, 25% Series A, 19% Series B. Okay, so that's really useful to know. And then the second poll, let's get that one done as well. So the second poll was really about, if you are a startup, have you had to pivot your business to maybe take advantage of COVID-19? So maybe if you're in the med tech space, maybe you've sort of found an application to pivot. Or if not, have you had to alter your plans around investment? So maybe you were going for investment right now and had to change. So that's the second poll. Hopefully that's going live any second now. Just wait a few seconds for that. Okay, so most have, so 59% have had to make some changes because of COVID. Okay, so that's really interesting. So that's that really kind of leads us into the first question, really. So my first question for the panel is really, have you seen changes due to COVID-19 in terms of your investment thesis, the risk profile that you've are sort of comfortable with, equity levels, or even your investment ticket size? So I'll start maybe with James on that one.
Sure. I think on our side, it's been a confusing few months. I think that it's obviously harder to get to know people. It's harder to do diligence. It's harder to figure out, sort of look into someone's eyes and feel like you understand them. Not clear to me whether that means I'm making better or worse investments, to be honest, because it's obviously true that there are a whole set of biases and sort of ridiculous assumptions that I used to make based on seeing people in person. And so in some ways, it's possible that I'll make better decisions in this time, and time will tell. I think that the interesting thing about seed stage investing is that, we're not investing for the next 3 months. We're investing for the next 3 to 15 years. And as a result of that, some of the things that are so hot and important right now are interesting, but probably not going to be relevant 5 to 10 years from now. And then there are also a whole set of things which are fundamental changes in the way that people are going to think about relating to each other, and teasing out the differences between the two. That's the fun of this job, right? And I think that a couple of the things that seem like they'll be durable is it entirely likely that people will have very different expectations about physical safety and physical intimacy and face-to-face communications, and what that looks like and how that develops is an open question. It is entirely possible that this sort of massive acceleration in digital transformation and digitalization of work will cause all sorts of problems that we'll be trying to fix over the next 10 years. And so those sort of ideas, I think, are the things that we think about. And then I guess the last thing I'd add is that there's a sense in which, because there's an illusion that startups are driven by just technical innovation or the brilliance of founders. It is also critically driven by buyers and the things that people are willing to buy. And there's a new openness now because everyone realizes that so many of the assumptions they used to have are just wrong. And so that process, we're all in the middle of figuring out right now. And I'm really eager to engage on it over the next hour or so.
Okay, thanks, James. Carina, any thoughts on this?
Yeah, I mean, just picking up on the last comment that was made, I completely agree. I think disruption to the way we do things, disruption to normal behavior is quite helpful for companies that are disruptors. So it creates an in and an opening. So when we look across our portfolio, some companies have actually really benefited. But when it comes to making new investments and just thinking about what would be helpful for this audience, my reflections on it would be, I suppose towards the beginning of COVID really hitting, there was definitely a sort of pulling back across colleagues, across the industry, where people were focused on triaging their portfolio, figuring out what this all meant, thinking about how this changes different investment theses, whether there are opportunities, what the new risks are. And it feels like in the last couple of weeks, the last few weeks, and it's constantly evolving, but it does feel like people are starting to lean in again. It feels like now we'll see what happens, of course, as time goes by. There's a sort of lag effect for how a recession or a shock like this affects pools of capital like VC, because of course we raise our funds and deploy them over a number of years. So if things are still very difficult in a year's time, you may find that there's less capital around to invest in startups, and that may start to have a knock-on impact.
Okay, that's really interesting, isn't it? So we may not have actually seen the effect to sort of investment until maybe a couple of years' time, when it's the recession is really kicking in. And
yeah, and that's reflected in historic data when you look at the bottom of the recession in public markets and then the bottom of the recession in things like VC. There's often a lag.
So
you can expect to see that now.
Yeah, exactly. Simon, any other thoughts on this?
Yeah, so I guess in direct response to your question, has it changed our investment thesis or stage or kind of check size? I would say no, not at this point, but it's still very early days, right? Echoing some of the points which have already been made. Now, looking at companies at the moment, it's really hard to judge performance, but maybe counterintuitively, it's easier to judge teams at the moment. And I guess the way that I think about that is, earlier stages, seed stage, Series A, it tends to be more and more about the team than it is about the product and what the company is doing. And I guess that the performance element becomes more important as you selling more, you get to profitability, you have more metrics that you can measure. But on the team side, judging how teams have reacted to the world that we now live in is really telling, right? It has to be a combination of questioning everything about your business, picking what you believe still works and what doesn't, but also looking for opportunities in this environment as well. And just on the performance side, you've got to think about this like a kind of an escarpment, right? We've had a really steep slope, everything locked down, and the world changed very, very quickly in a matter of weeks. But the route out of this is going to be months, if not years, and people still wearing face masks in bits of Asia as a result of SARS-1, right? There are going to be really long-term changes and effects here. So there's definitely an element of, okay, let's sit back and think about how the world's going to change and what opportunities are here. And I think entrepreneurs are the best people that we have around to see and exploit those changes.
Sure. And that's a really interesting point, right? Because I think it is very much known that at sort of the early stages of investment, you're as much investing in the team as you are the market or the product, because that's usually takes longer to develop and work through. And I do like your comment on, actually it's partly about how the team is reacting to the situation and what they're doing. And I've seen certainly in the medtech space where there have been startups that have not fully pivoted, but have seen this as an opportunity where they can slightly change their offering or focus on a specific COVID-19 application that sort of allows them to get some opportunities there that maybe they wouldn't have exploited otherwise. So that's interesting. I just sort of open that up. Are you guys actually seeing any sort of differences in the sectors that you're focused on now or investing in? Because obviously the sort of impact of both the short term and the long term in various sectors are quite significant, I think. So have you changed what sectors that you guys are focused on? James, if I go back to you on that one.
So I'll admit that we're mostly focused on, or at least I'm mostly focused on, a whole series of machine learning infrastructure and machine learning application companies. And so that focus has mostly stayed the same, that we've been sort of thinking a lot about the nature of distributed work, and that focus has also stayed the same. Now, that said, when I used to talk about distributed work, I used to only think about sort of opening additional offices all over the country or all over the world, and we made a number of investments along that theme. But now work is atomized, right? And sort of, it's not like we're in distributed offices. We are all in our own little pods, and then figuring out how that sort of collaboration work actually happens is just clear how much harder that is. And so along those lines, I've mostly, to be honest, sort of stuck around the things that I've sort of been poking around over the last 3 to 5 years.
Okay, so no changes really from your perspective. Carina, anything from your side?
Yeah, I think we're not strictly thematic, so we define our scope as UK only, seed stage only, no B2C. We only do sort of B2B and enterprise sales driven businesses. And I suppose the advice that we give to our startups is, of course, face reality as it really is and have a commitment to thinking through your options, but also a sort of panic-driven pivot is not necessarily sensible, and you should think carefully about how does this come back to your core thesis or your core value proposition. And I think the same applies to us as an investor. I would say there are certainly certain areas that have tailwinds now that look more interesting, and certain areas that don't. I mean, retail, travel being the obvious ones. And we did do an investment that was very much positively impacted by COVID, a couple actually. One around virtual participation in clinical trials called Sarno Genetics, and one called Omnipresent around enabling companies to hire easily and effortlessly all over the world. So obviously, those two were, there was a lot of momentum to those deals as a result of COVID. But I wouldn't say that there's been any sharp pivot to different themes or different ways of investing for us.
Okay. Simon, are you seeing the same sort of thing, same focus on the same sectors?
Yeah, I think we're in a similar place to the others, in that we we focus on these three areas: deep tech, future health, future money, and we're quite deep in each of them. So no, at this point, we don't have any plans or thoughts to focus elsewhere. I would say there is definitely a relative difference in the deal flow that we're seeing into each of those focus areas at the moment, with the kind of future health guys seeing by far the most new deal flow coming through, and I think future money seeing the least. But no, otherwise, no plans to focus on different things.
Okay.
And I think, Carina's already said it, that there are definitely elements of the economy you see are going to recover faster, or are getting a bump, and elements which are going to recover slower and are seeing real problems for their future.
Okay, that's great. So enough of COVID-19. So let's sort of look to the future. So the theme of CogX is how do we get to the next 10 years and how do we do that right? So I'm really interested in the difference between the big sort of step changes of innovation compared to the sort of smaller progressions that sort of follow, and then the next step change. So as I mentioned in the intro, I think the last decade we've seen a big sort of step change and hype around AI that's been driven by deep learning and reinforcement learning, and that's great. And that's led to some of the early companies sort of doing fantastically well and sort of being a sort of more platform play type of company. But I think now we're starting to see a lot of the smaller step change sort of iterative innovations, if you like, coming through. What would be great to get a little bit of an insight is how do we see that changing in terms of what investors are looking for from an AI startup, and obviously the hype has now slightly disappeared, and what are the key factors that from an innovation perspective that VCs sort of focus on? So I'm going to start with Carina actually on that one.
Yeah, I think it's a great question. I mean, the way I think about it, there are sort of stages to technological progress. There's the sort of discovery stage, the research and invention stage, and then the sort of implementation stage. And I think the really crucial thing as a VC investor in AI is not to sort of look at it as this one homogeneous lump, but to think about where are the different subsectors and techniques along that curve. And I think that's where certain things the industry got wrong. So autonomous vehicles, it feels like it was more in the research phase than people realized. And conversely, I think, we've seen massive progress in NLP recently from transfer learning from pre-trained models. And so there's an amazing explosion in potential implementation there. So I do think it's very important when investing in something, deep tech like this, that you think about where is that window of opportunity and at what point is something ready to come out of research and move into implementation. We're definitely seeing less of the sort of AI washing on decks where you just get sort of the word AI thrown in at random points with no clear explanation as to why or how or what it really does. That's different. I think founders are recognizing that it needs to be less sort of generic and more specifically focused on solving a real unmet need in a way that distinctly suits that approach and that particular technology. And so I'm always excited when I meet teams that really deeply understand their problem space and have thought very intelligently about how you create equity value. So it's not just we're going to build some cool tech and people will come and then we'll sell it for loads of money. It's by using this cool technology, which is almost besides the point, we're able to solve this problem in a way that means that we as a business can capture value and create equity value. And that's much easier said than done. That's a hard needle to thread. So you don't meet those businesses very often.
That's a really interesting perspective. So it's much more focused on understanding your customers and what the problem is and where the value is. The fact that you might be using some AI technique is almost, that's just part of the solution.
Yeah, I mean, I think, a few years ago, you could get away with basically being a bunch of amazing AI researchers and you might have an exit. But when you look at the number of exits that are happening and also the hiring rate in the big tech companies for AI researchers, it's really slowed down. And now it's more about deployment, implementation, efficiency, and that's reflected also in the types of startups that are getting funded.
Okay. Simon, any additional thoughts from yourself?
Yeah, I mean, it's kind of the multi-billion-dollar question, right? If you could predict the next big thing, then you'd be quids in. And I guess the way that venture investors go about doing it is by making bets in lots of places and hoping that one or two work out. It was super interesting, right, over the last 20 years or so to see this kind of step change and AI and machine learning pick back up. You know, as you mentioned, Andy, in the intro, rediscovery of backpropagation and maybe compute and data just being at a level where you started to see little, I guess, really interesting results. So maybe go back to AlexNet and the kind of step change in machine vision that was demonstrated there. And as a result of that, there's definitely a kind of super linear scaling because people see that, and then it co-opts a bunch of additional compute and additional resource and people into that space, and so it kind of accelerates. Where we are now and what we see going forwards, I think we're getting to the point where it's kind of incremental improvements, and we're still on the lookout for the next kind of big step change. Very hard to predict, but it comes from this kind of increasing base, right? So, as the amount of compute power being put on ML problems just continues to accelerate, as the silicon is repurposed to be specifically kind of, I guess, focused on AI and machine learning algorithms. What opportunities, what business models, what additional technologies, what algorithms that kind of looked interesting but didn't run on yesterday's compute will run on tomorrow's compute. So we're definitely keeping an eye on some of this stuff that's happening.
Fantastic. And as a professor of AI, I'm quite optimistic that there will be many other large step changes on the technology. But I think, James, when we spoke last week, you were quite interested in the potential of maybe a business model change that could be a sort of key driver in the next sort of wave of AI companies. Do you want to sort of talk a little bit more about that for the audience?
Sure. When I was in college, a number of my professors were veterans of the AI wars of the late 80s, and they were the ones who sort of escaped into academia. And the story that I was told at that time was that this was primarily a case of the technology not living up to the hype, and that it was a situation in which if only they had figured out another technical breakthrough, then we would have figured out some way for their company to continue to get funded or get more money from DARPA, which is the US military funding agency. I think now that perspective is actually basically wrong. That the right way to think about the AI winter of the late 80s, early 90s, or that started in the early 80s or late 80s, early 90s, is that the problem actually was that as promising as the advances in expert systems and a bunch of other things we never really figured out a better business model or a reason why machine learning or expert systems should be the dominant way that people work. And I think that we are in a similar time right now where the real search isn't just for the next technical breakthrough, although that is important. The real search is for the business model that is uniquely suited for machine learning, the business model that only makes sense for the very weird way that people build machine learning applications. Now, for sort of folks like me who are used to building sort of either client-server applications or web-based applications, the notion that you're so dependent on the data you collect is just weird, right? The cycles of development just don't make sense. And those changes have been really interesting to watch over the last sort of really 3 years as people have really figured out how to consistently build machine learning based applications. And the thing there then is, as the engineers figure out how to do it and the product managers understand the advantages of building something machine learning based, it still takes a while for the dumb business guys to finally say, oh, you know what, actually, now that I understand what you're actually doing, and I understand it's not just slideware, now maybe I should sell something differently from the way I used to sell it. And I think that opportunity is the sort of undiscovered country and the big opportunity that we're just all waiting for and actually searching for. The real disappointing thing for me as I talk to entrepreneurs and teams is that many of their business models really are just SaaS business models or their services business models. And there's just not that much variation yet. And I suspect that the set of technologists and business people and marketers who come up with ways to talk about machine learning and different ways of charging and getting value, those are the real opportunities. And the more variation we get, the better chance that we'll avoid the AI winner of the late 80s.
No, that's really interesting. For me, it's really important that we try and avoid the next AI winter. So if we can come up with a really great business model that sort of keeps the industry driving forward, that would be great.
I mean, you guys think about cars, right? And you think about how exciting and how much investment there has been around sort of level 5. And you also think to yourself how ridiculous that investment was. That basically, if you were to ask anyone who actually was doing the back of the envelope, they would say, this level 5 thing seems kind of ridiculous, and we're not going to get there. And yet there was massive overinvestment. And I think what's interesting is, along with that gap in expectation, we're slowly getting to a point where people realize they're not going to get level 5, and they're going to maybe get something a little bit below that. And actually, they might be quite happy with it, right? And I think that's sort of like the exciting puzzle we're in the middle of figuring out.
Yeah. And I think just exploring the business model a little further. So for me, there's probably two sides to that coin. So there's the sort of technical, sort of algorithmic view of how that could create new business models. But I think, as we know, data is driving a lot of this. So I'm wondering if there's a new way of looking at how we share, use, value, and sort of work with data that might actually create that new business model that could drive some of that innovation. And really just reflecting on that in terms, again, how AI startups have changed. So we kind of see a lot now, or at least I see quite a bit of startups that they're calling themselves AI startups, and they're using, some cutting edge algorithms, but they're applying it just to a new data set. And, they may have access to that unique data set, but that's essentially what they're doing. Do you agree that there could be that sort of business model might be?
Yeah. So my favorite story is of Microsoft getting in trouble for uploading crash data from Microsoft Word in like the mid 90s. And everyone was outraged. They said, how can Microsoft do that? It's terrible. They're going to destroy the world. And yet we're all using Google Docs now. And Google sees every single key press and delete that I do for everything I write. And I think that shift in mindset, it's so hard for us right now to imagine a world in which we might be willing to share data about with our competitor. And yet I'm pretty sure that someone's going to come up with a compelling enough product that will change the way that we think about data. And that really is marketing, not in the AI whitewashing sort of way, but marketing in the best sense of the word. And that's what we're looking for.
Yeah, fantastic. And I think, so that's quite encouraging, I think, because it's going to be interesting to see who comes up with that new way of working, that SaaS model for the AI sort of generation, as it were, that can come up with something very unique that transforms the whole ecosystem of technology and business. So I think we're all keen to sort of see who might sort of be driving that forward. So, and for me, I think it will be interesting to see if that's one of the existing companies out there, or is that going to be something brand new coming up? And just to sort of say that, I was looking at some of the startups that started during the start of the last recession. So there's lots of companies that have been very successful and sort of grown up from sort of starting at sort of the early stages of a recession. So I'm sure we're going to see another resurgence of a whole heap of great companies off the back of that. So that's super exciting. We're coming very close towards the end of the session now. So we've probably got sort of 8 or so minutes left. So what I wanted to sort of do next is sort of take an opportunity to ask each of you, what are the sort of key bits of advice that you would give a startup founder when they're going through that sort of fundraising process? Because it's super stressful, super scary, I think, for founders at normal times, and I think it's probably even worse now for people. So really keen to sort of any sort of nuggets of tips and advice that you could give to those founders who are maybe going through that process right now. So I'm going to hand that over to Simon to start with.
Oh yeah, well, maybe a great many, but I'll try and keep it to just a couple. I mean, in this environment, one of the things that I would say is you have to talk about COVID and the impact that it's going to have on your business. I think we're getting to the point now where it is, it's so prevalent in the media and everybody's day-to-day lives, they kind of forget about it. But you can't go through an hour's pitch meeting with an investor and not talk about the steps that you've taken, the impact that it might have on your business and the opportunities that might come from it. So as much as you don't like talking about it, and none of us like, continuing to talk about it day in, day out, because we're probably sick to death of it by now, you do have to mention it.
Okay. Carina, anything from your side?
Yeah, I would say a couple of things, not specifically to COVID, but sort of more generically. I think one thing that's really hard as a founder, and I experienced this when I was fundraising, is to find the right balance of telling the story of what you're doing today, but not ending up too small, and telling the story of the big vision and not ending up too sort of hand wavy. So finding a way to connect how what you're doing today leads to a sort of step-by-step process, drives a wedge that gets you to a very big outcome. And I think that is really the secret of a great pitch. And that's actually very hard to pull off. And I think secondly, connected to that, admitting that as a founder, you are in a sort of search process at seed stage for product market fit, for answering hypotheses and sort of falsifiable hypotheses that you're going out and testing. So I always find it very compelling when a founder is clear about what they know and what they don't know, and with the things that they don't know, how they're going to test and answer those questions. So those would be my two lessons from being both a founder and an investor.
Okay, thank you. James?
I guess a few things. One is, fundraising is essentially like enterprise sales. And the best enterprise salespeople I know have found ways in this environment to disrupt traditional ways of communicating and no longer needing to take people out to steak dinners. And I think what's exciting and interesting about right now is that VCs don't know what to expect either. We don't actually know how to communicate with founders and entrepreneurs. And so you could come up with the right conventions and you can come up with the ways of communicating with us that break the normal cycles. And in doing that, if you do it in an annoying way, then you're not going to be successful. But if you're able to figure that out, then you'll have a unique skill set that's going to be valuable for a while. Specifically around machine learning related companies, I would just say that we were at a point where slideware was good enough. We're no longer at that point. In these days, the expectations are just much higher around what you're going to demo or show off, basically based on working nights and weekends. And that expectations just sort of flew by without us really realizing it. And I think that that's just worth marking, that it's no longer acceptable to say, hey, I've got this great idea and let me show you the slides and the paper that I wrote. And so I think we've taken the next step there. And then I guess the third thing I'd say is it's just a reminder that like venture is so wonderful. It's my whole life. I love it. But it's not necessarily the best way to finance a business. And especially in these difficult times, you might want to consider thinking about actually getting customers first, relying on consulting first to prove out the business, and all those sorts of scrappy things that fall outside the traditional venture model are actually going to be the markers that VCs are going to be looking for. And ironically, that will be part of what makes you interesting to VCs.
That's a really interesting point, actually. And I've seen this recently as well, where startups have, and I take your point that we're way away from just having an idea and some slides and getting funded. And startups are really having to build that sort of prototype working application, in fact. And I think if startups have gone to that level of producing something, then actually going out and getting customers is probably a good way forward, right? If you're able to in this climate. But that's definitely an interesting option as well. We've got a couple of minutes left, I think, so I'm going to sneak in another quick question if we can. So I'm interested in maybe the difference between what I would call a traditional AI startup and a more deep tech startup, and what differences VCs are looking for with a deep tech startup. What are the extra things that maybe are important for a deep tech startup? So I'm going to give that to Carina first to sort of make a quick comment on, if you can.
I suppose it depends on your definition of deep tech, which is one of those terms that people define very differently. So how would you define it?
Well, I think for me, deep tech is where there's a significant element of research involved, and that can be across any sort of particular industry, I guess.
Yeah.
So a heavy research element to it.
Yeah, and I suppose some people also define it as meaning that there's hardware or there's wet lab work involved. I suppose it comes back to the point I made earlier about, really understanding where you are on that development curve. Are you at the sort of research and invention stage? Are you at the implementation stage? Is the business model appropriate to the stage that you're at? Is there an exit given the appetite in your particular niche within a reasonable time frame for the stage that you're at? And so it really is very kind of bespoke and depends on the specific business and the specifics of that particular market. So yeah, not a very straightforward answer there, but that's where I fall on it.
Okay, that's really great, and I think we're just coming to time now, so hopefully everyone's found that super useful. I believe we're taking a short break, and then we're going to be in a breakout session for Q&A in a few minutes' time. But
thanks for doing this, Andy.
Want access to more CogX videos? Subscribe now for free at cogx.co.